So oil has suffered a rout that's brought down prices this week. Analysts are saying oil is trading off of fears of a collapse in consumer demand given the uncertainty surrounding the banking sector, and as well worries that a deep and painful recession could be looming. And here now to talk to me about this is Tom McNulty, President, TJ McNulty Company. So oil futures moved slightly higher this morning, but let me ask you a hypothetical. Say that it kept trading down. Would that have an impact on prices at the pump?
Yes, it eventually filters through the complex, as we call it, into the refinery complex. It takes time. And again, we're hitting this what's called the summer driving season, usually puts upward pressure on prices. I don't think prices at the pump should be expected to rise in the short term. So I think downward WTI prices, that's West Texas Intermediate, will filter through, but I don't think it's going to be that much. We're talking, I'm thinking 8 to 10 cents a gallon, basically, which certainly is real, but I don't think it's going to be that substantial.
So of course, yesterday we went below $70 a barrel. Do you think this is going to be a trend moving forward because of all the things that's happening?
I think we are in what's called a trading range. Sometimes that's a bit of a cop-out, but I think it's real. And the reason for that is there's upward and downward pressure. What you're going to read about and see in the market is concerns about demand. A lot of news this week with the banking issues in the U.S., the Fed, recessionary fears. There's a lot of talk of recession really worldwide, which would normally put downward pressure on crude prices. I think there's a supply story as well, though. There's a lot of oil in the market. Keep in mind that Russia is funding its war in Ukraine largely with energy exports, and they're still selling a lot of oil. There's been this assumption that, well, they'd be embargoed and punished for their behavior. They're selling a lot of oil to India and to China and who knows where else. So there's oil coming into the market that's not necessarily being counted. So I think, and OPEC Plus, there's always cheating, right? People are always selling on the margin. So I think there's a lot of oil on the market as well as demand concerns. So we're in this range. I guess I'd have to say it could be kind of a $65 to $75 range for the time being.
Right, and I think a few days ago, over the weekend, if I'm not wrong, we got numbers from China's manufacturing. It was down unexpectedly. I wonder if this plays into everything that's happening as well.
It does. That's in the demand argument. There's a lot of demand for crude throughout Asia, East Asia, Southeast Asia, Southwest Asia. So that kind of data would be considered bearish. Now, the trick is, how accurate is it? It's difficult to sift through data that is often published out of the PRC because we don't know the details behind how they count it. Like when the United States releases its unemployment numbers, they have pages and pages of data. You can debate it, but I mean, they at least try to tell you where it's coming from. So I don't know how accurate that number is, but it's a bearish number.
Right, and I'm looking at the 10-year Treasury as well. I mean, it points to a direction where the economy might not do so well, but I'm sure oil will trade up after we're past this episode. And historically speaking, when the Fed tackles inflation, there usually is a rise in unemployment, and if that happens, we'll definitely see some kind of downward pressure in oil prices and maybe gas prices as well.
Yeah, I mean, I think if the trading range is 65 to 75, that's fine. I mean, I think if it moves farther below than that, yes. I mean, gasoline prices, diesel at the pump in the United States should trade down a bit, but I just don't think people should expect large movements like $1. I mean, I think we're talking 8, 10 cents. The biggest move I would think is possible is 15 cents a gallon, but I doubt it.
So right now, do you think it's a good time to, take some profit when it comes to oil futures, securities, equities?
Well, I think it depends where you are in in the stocks. When you have large integrated companies, I think Total just announced a huge investment. I think that the big players tend to be, companies that people kind of hold for a long time. Independents in the United States. Now, as I mentioned before when I've been on with you, I'm very kind of bullish on energy in North America in general. I think that there's a lot of cost discipline that's come into these companies, so they're going to produce very, very strong economic value over the months and frankly years to come. So I don't, again, taking profits is more how you manage portfolios and how you're managing cash, which I don't really get into individual stocks. I still think these are very healthy, strong investments throughout the energy complex. And I'm pretty bullish in general, regardless of prices. Again, these downward movements in Brent and WTI crude are really not that large right now, and we're still trading way above long-term mean pricing. I mean, remember, oil has been 30s, 40s, 50s, so these prices are still strong. That's why I think there's supply. I think people are selling oil at these prices because they're making money at these prices. Even if their margins have become a little thinner, they're still positive.
So you're bullish. Is that in the long term?
Right now, short term and long term, there's just too much. There's too much demand for energy, in general. And even if there is a recession and demand drops, with a recovery, it'll spike very rapidly. I mean, there's just growth throughout the developing world. We tend to think of Europe, North America only. You have to add the entire global economy and growing economies throughout Southeast Asia, Southwest Asia, what happens in Africa and South America. So I think that, right now, to grow your economy, you have to have energy. And so I just have a short and long-term bullish view, and it's going to have winners and losers depending on which segments you're in. But energy's needed to grow. So, if there's a recession, fine. But you come through it. On the other side, there's rapid growth.
Now, this may seem like a basic question, but when oil prices go up or when it goes down, is that a good thing or bad thing?
Well, it depends on where you are in the economy. And if you're in an energy producing economy or an energy producing company, it's good for you. It raises the costs throughout the economy to produce goods and services. So it's both plus and minus depending on where you are. High energy prices tend to be difficult for consumers. So I think that there's generally an equilibrium range. We're probably at that range or really still above it. Again, we've had crude prices in the 50s and 60s not that long ago and even below that. So I think that these prices are probably, they may be at kind of an equilibrium, but I still think that, if they were to trade down, I think it still helps growing economies, and I don't think it hurts companies that run their cost side well. So there's room to move.
So that equilibrium, would that be between somewhere around 65 and 70?
I mean, I believe that the range we're in, if it's 65 to 75, that's fine. I think it's probably a little lower than that. I think that producers can make money at prices lower than that. I think Russia's selling oil in the 50s, maybe around 60. So I think there's room for it to continue to move a little bit lower without hurting companies that are well run. They'll still sell crude because they're still making margin.
People are saying that gas prices have risen after Biden took office. I wonder, what is the cause of that? During the Trump administration, I think it was somewhere around $2 per gallon. Can you just enlighten me on that?
Well, I think there's been a lot of challenges in the refinery complex. I think there have been shutdowns, turnarounds. We certainly haven't built any new large refineries in a very long time. So there's been, capacity constraints downstream. That doesn't help. I think that, there was certainly a dialogue, if you want to call it that, around trying to, move away from the fossil fuel complex. But I think that, and that caused maybe some reductions in production, so you have higher crude prices that filters down into downstream refined products market. So I think that, yeah, there was definitely some pressure to kind of cause supply side constraints that feed the refinery complex. But I think prices have traded down because crude has been flowing into refineries. They've been running crude, producing diesel, jet fuel, gasolines. So I don't know how to break out the difference between the political and the supply demand economics. That would take a little bit more study, but it's a mixture of all of these factors. I think that's a fair point.
Okay, I see. And it seems like gas prices have just been going up throughout the decades. I mean, is it just going to continuously go up?
You mean gasoline, refined products, not natural gas, right? Okay, so I
Yes,
think
yeah.
because natural gas has been trading down actually very low, close to $2. That's going to depend on a very complicated supply-demand calculus around, do you have a real build out in electrification of cars and trucks? And I think that is very aspirational. I think that would take a very, very long time. And I think that you have to have massive build out of power generation in order to be able to charge aspirationally every vehicle in the United States. So I think that demand for refined products remains, I think, strong in the near term and really kind of medium term. And I think that will hold prices probably where they are. I mean, I don't see them growing rapidly or declining rapidly for any economic reasons right now.
Speaking of electrification, in your view, do you think electric cars could completely replace gasoline cars, combustion engines, given enough time?
Depends on the time horizon. I've spent a lot of time in the power industry as well, not just oil and gas. And it is a massive endeavor to build out power generation and grid capabilities and charging capabilities if the entire United States switches to electrified vehicles and trucks. Even there's a DOE study that talks about how much extra generation would be needed. So I think that if that is going to happen, it will take a very long time because a lot has to be. It's not just on the car truck side. You have to make sure there's power to charge all of these vehicles. And that is not the case right now. We're not even close to the installed capacity needed to do that. Not even close.
Okay, what about fossil fuels? From where you're standing, is it theoretically possible to completely replace all fossil fuels entirely?
No, I don't think so. And you've probably heard me say this before. We have to always talk about how to bifurcate crude oil from natural gas. They tend to get lumped together. Natural gas is a fossil fuel, CH4. It's a molecule. It is used for 30, 40, 50 different things throughout the global economy. It's used in fertilizers that feed at least a third of the world's food supply. I've seen data that says it's half. So if you eliminate it, how are you going to feed people? As far, crude oil is different. That may grow slowly, level out, decline. That's hard to say because that's very narrow. Diesel, gasoline, jet fuel, lubricants. Natural gas is a fossil fuel, and it's used for lots and lots of things that are very important. I don't see how that can be removed really anytime soon, maybe ever. Crude oil is different, so they have to be talked about differently.
All right, just one last thing. We got the rate hike yesterday from the Fed, so I want to talk a little bit about inflation relative to oil. How much did oil really contribute to inflation? I hear narratives like the Biden administration is not letting the U.S. produce enough oil, and that's leading to higher prices. Maybe I can just get your thoughts on that.
Well, it's a little complicated because any administration can have an impact, but only can control certain things. Production of oil and gas on private property can still continue. Permitting issues to constrain pipelines can hurt energy production. So the administration had a policy, at least early in its term, of trying to have kind of a braking system on the production in the United States. So that definitely happened. You could produce oil, but then you have to get it to market. Same with gas. So it's a very complicated complex to move the products into where they are used. I think that did happen. I always get a kick out of inflation numbers that say, but exclude food and fuel and energy. How do you exclude energy and food? I mean, it's always done because of volatility. The real inflation numbers, I believe, in the U.S. are still pretty high because you just talk to average people what they're paying for at the grocery store and prices for power. Even if gasoline prices are kind of moderated, energy prices are still fairly robust. So inflation has to include food and energy. And, the notion that, well, no, that skews it because it's volatile, that doesn't feed a narrative that works for the average American. So I think energy prices that are high are inflationary. And so I don't know what inflation numbers to believe. We're being told they're declining. Okay, that may be true. But the average person going to the grocery store is not seeing that. Food prices and grocery store prices are still very high. I see that myself. So I don't know if inflation is really moderating as quickly as Washington is saying. And energy feeds inflation. It's part of the cost structure of everything. I mean, that just can't be avoided.
Well, I mean, I just want to point out one thing because inflation, when it slows down, I think it doesn't mean that prices are coming down. It just means they're increasing at a slower pace. So we actually need deflation, I think, for prices to come down from where they are. So hypothetically speaking, if inflation is actually at 0%, year over year, we would still have high prices. We would need like negative inflation for prices to actually come down. I don't know if you want to comment on that.
No, that's a fair point. There's PPI and CPI. So there's a rate of change and there's a current price level. So the numbers that come out of various institutions in Washington will talk about rates of change. And if they're slowing, they say that's great. I mean, fine. But you're right. Absolute prices are what you see today. And I think that for, real cash prices that the average person sees to decline, then you're right. There has to be reversal in the velocity of price changes. Just like you said, it has to go in the other direction. I believe that's what the Fed is trying to do. They're trying to raise interest rates to make capital more expensive, to cause price changes to decline or the declines to be accelerated. But I think that I don't think it's happening as quickly as we're being told based on what I see every day.
Yeah, it could get sticky from this point on, actually. A lot of people are saying it could remain at around 4%. That's the official number, somewhere around there for a while. But anyways, thank you for talking with me about all this today, Tom. Always great seeing you.
Great to see you. We covered a lot of topics. You have a great day. And as always, thanks for putting me on.